Payment Services Head of BDO Unibank.
Thank you. Good morning, everyone. What a scary picture. I hope it doesn't scare you away from the topic this morning. But I'm glad to be here. Thanks, the WFIS, for inviting me. I'm going to share a bit on open banking, which is very similar to open finance, which is the same concept that Jing just spoke about. And the focus of my talk today is really how it could be used in a proper manner that's more useful and more applicable to all of us. So imagine this, like since we're already in the imagination stage earlier, what if you only had one app to manage all of your financial services requirements? Despite the fact that you may have multiple bank accounts with different banks, despite the fact that you may have different wallets with different EMIs that you may actually use on a day-to-day basis, and despite the fact that you have to go through reams and pages of different websites to understand what are the products that the banks may give you in order to help you with your housing loan, your auto loan, your credit cards, and just your personal loans. Imagine that just being in one application. And that's what open banking is all about. It's about the ability to get all that information into a single location where you don't need to log on to every single bank app, every single bank online banking. You don't have to go through a lot of different websites and gather information for you to make your right financial decisions and for you to do analysis of the information of where your money is, how you're using it, what potentially you need to pay in the future, and more importantly, where you can invest. The beauty of open banking, by giving the ability and an infrastructure that will allow you as the individual to have full control of your data and not be bogged down by all of the infrastructure that's currently around you, is a very, very powerful tool. And that's what open finance aims to be. So open banking, through the diagram you see on the left-hand side, is the ability that you don't need anymore to have multiple apps, but simplify the way you can actually do your banking and managing your cash. So today, I'm just going to go very quickly through an actual use case. And this use case is a live use case which started actually in the UK. And the UK model, I think, is the global model now for open banking. Only because among all of the Western countries that actually wanted to start with open banking, the UK is really taking it a step further. And it's been a 7-year journey since the introduction of the regulation, which is really founded on what they call the Payment Services Directive 2, which is, of course, a EU regulation that needs every EU country to make it into a local law. And the local law in the UK is called the Payment Services Regulation. What does the PSD2 do? For those who are familiar with the Payment Services Directive or the regulation in Europe, there was actually a PSD1 before the 2. That's why, so part 2 na to. The difference between 1 and 2 was that the PSD first harmonized everything in the Eurozone, but not only introducing the euro as a currency across all the countries, the 27 countries in the EU, but actually putting a standard on how payments will move between countries, where you don't anymore realize borders between moving money from the UK to Germany, Germany to the Netherlands, Netherlands to Switzerland, Switzerland to Denmark, but rather it being one single clearing area, which they call the Single European Euro Payment Area, SEPA. Now, when that was established, they then took it to the next level. And the next level, which is the PSD2, looked at focusing on the client and the end user. Although the PSD1 always had the consumer at the forefront of everything they did, they realized as well, the regulators in Europe, that the banks are constantly bogged down by regulatory requirements, compliance to anti-money laundering, and all of the requirements in order to keep the banking system safe, that they don't get to invest in proper tools and services that the end users can benefit from. So imagine you, of course, have your app and then you realize, okay, I want to make a payment. And the app that you might not have all of the functions you need. For example, you might not have the ability to store a payer that you want to always pay. But every time you have to do it, you have to build it again. And these types of innovations, which are very basic in the day-to-day things we do, could not come to fruition because the banks were not investing heavily in their infrastructure. And that's when the regulator said, why don't we introduce new players? And the new players that they introduced are really what they call third-party providers or processors. So fintechs, basically, a term that we all know. But what they wanted to do was introduce fintechs that were also regulated and licensed. Because you cannot just have an infrastructure in place without the proper controls. And one control, of course, that the regulator has is the ability to license. You put a standard of what the fintech needs to achieve. And that would be a standard not only related to the security around the infrastructure they're building, but also standards in relation to how you interface with each other, what kind of file formats you use, what kind of interaction is needed. And by introducing this licensing regime and fintechs wanting to participate, knowing that they have technology services that they can actually sell with potentially a bank partner or even sell by themselves, is really a good business proposition as well. So the regulator really had in mind the end user, the consumer, and the small and medium enterprises. And by introducing this regulation, then moved into the execution of it. So the foundation was the regulation. What then executed it in the UK is what we call the Competition and Markets Authority. It's a UK government agency that ensures there is competition within the country to remove monopolies, to remove oligopolies. And at the same time, the FCA, which is the Financial Conduct Authority, which is the other regulator in licensing, and the PRA, the Prudential Regulating Authority, which is the Bank of England, which is similar to the BSP, all work together to ensure that the licensing of the fintechs and of the banks and of the services that they want to build within this open finance are in place. And they make sure that they enforce this and that they, where possible or where needed, even put their foot down to actually penalize certain players. But I think the biggest and most important thing that they introduced, which maybe in the Philippines might not fly, was the imposition of the OBIE, or what they call the Open Banking Implementation Entity. Now, what is the OBIE? The OBIE was an entity that was built by forcing the top 8 banks in the UK to put money together to build an entity that will basically run everything in relation to the infrastructure, develop the standards in relation to APIs, develop the standards in relation to the security, and most importantly, ensure that there is a level playing field between all of the banks, or what they call the ASPSPs, which stands for Account Services, Payment Service Providers, and the AISPs, the Account Information Service Providers, and the PISPs, the Payment Initiation Service Providers. So, in essence, what they did was put something in the middle. And this OBIE entity ensured the execution of open banking. Now, it's not an easy thing to do because it did take quite a lot of political will for the Bank of England, the CMA, and the PRA to put their foot down and say, we need to put this together in order for us to build the right services and ensure that there is a secure way that the end user has full control of their data and, more importantly, full control of their financial decisions in their day-to-day operation. And what do you have at the end of the day? You have services now in the UK through financial institutions or third parties that allow me as a consumer to move monies freely between my bank accounts through a single log-on, have the ability to know what my cash flow looks like because it keeps records of all of my expenses for the month and forecasts what my recurring expenses could be, which could include my utility bills, my telephone bills, my grocery bills, gives me a pie chart of how I actually spend my money. And if I had excess liquidity or excess cash, it can also give me options of where I can place it. And it's all bank agnostic. It gives you, the end user, the control over what choices you can make. Versus now, especially in the Philippines, it's very difficult. You may not know what the interest rate that another bank gives versus another bank unless you actually go to the bank. You have to go to the bank and ask, I have an extra 50,000. What do you suggest I place it in? They might give you a product that might be a time deposit with a certain interest rate. But then for you to find out if that's a good rate or not, you have to go to another bank, have the same conversation. And before you know it, you're going to all of these conversations without a single view. Open finance eliminates all of that friction by making sure that everything is in the fingertips of the end user. So where are we in the Philippines? And I think right now we are at the very start. As what Jing mentioned, the regulation circular 1122 was just published 2021. The Open Finance Oversight Committee Transition Group was introduced in 2022. And we are still in the process of putting the foundations of where we as a Philippine industry want to be in. But what's important is what was mentioned earlier, collaboration. And collaboration not because it's something that will keep it going, but it's really for the end customer in sight. The banks in the Philippines, like anywhere in the world, are slow. We're big, we've got a lot of things to do. The fintech companies are nimble. They've got a lot of creative thought. They have a lot of technology in their fingertips. So what is stopping us from working together to build the right products and services across the board? So the circular is there. The OFOC transition group is trying to lay down the standards. And we're really just at the forefront. And we have actually a pilot, and this is taken from the Open Finance website, that's ongoing now, where volunteer banks and fintechs are trying the new technology of APIs. APIs first to inform and get information across from different sources, different banks to a single location for visibility, which is the first thing that an end user needs, for them then to make the right decisions and hopefully build upon that information for you to build the right services as well. So this is an ongoing voluntary pilot right now. It's going to run until the end of the year. The information that will come out of this, the OFOC transition group will potentially use to build and really standardize and finalize what we need to do as an industry. And to part, I just had a few words on what I think we need, or what we need to focus on in the short term. Open finance, like any technology, is a technology. So without a clear strategy, without a clear objective, and if we had multiple objectives, it's very difficult to see any traction. So it's important to break it down into small, bite-sized pieces. But the end state might be that single app that we all want. But for us to get there, we need to build things not only in the technology space, but ensure that there is financial literacy. We all know in the fintech and in the banking industry, fraud is quite prevalent. There's the fraud that happens is very similar to phishing, vishing, and it's all because of lack of education, right? People don't realize that if somebody calls them, pretends to be somebody else, that it's not okay to give them your credentials, because that is where the start of the fraud comes. And if fraud is there, the trust that the individual has with the system, with the infrastructure, with the industry is lessened. So we need to start by educating, I think is the very first thing that we all need to do. And from there, the infrastructure is easy to follow because technology is cheap. It's no longer expensive to build something because of all of our collaboration together, we can definitely get there. And after prioritizing, what's important are the regulations. It's always good to keep an open market where a market leaves the market forces, the banks, the fintechs working together. But there is also a downside to that. There is a lot of also lack of, I guess, I wouldn't say collaboration, but lack of push for us to really get to where we are. The UK made it in 7 years. They process about 1 billion transactions in 7 years in relation to open banking. But that was because they put the regulation in place, and the regulation gave the banks and the third parties a deadline of when it had to be done. And once that deadline was given, then things started getting traction. So it's important that we have the right laws. We don't want to dictate. I don't think the BSP has that intention. But if we want to self-regulate as banks and fintechs, we have to work together and be serious about the dates we put together so that at the end of the day, we get to where we want to go. The licensing regime is important only because we don't want bad players to come in and destroy everything we're building. And if you're licensed, you're regulated, you know everyone that is licensed and regulated are playing a level playing field. You don't want somebody who comes in and does not play in that level playing field because that again exposes risk not only to the end user but to all of us in the industry. And finally, I think a centralized execution is key. In Europe, if you also look at the history of how the countries move from multiple currencies to a single currency, and how all of the different countries, ACHs and high values, moved into one clearing for high value, one clearing for low value. It did take a lot of time. And the only way to do it was for somebody to say and stand in the middle, we will be the clearing, we will manage this for you. Otherwise, if you left it to everybody, everyone will do their own thing. And the standard would never be met. The execution would be very slow. And at the end of the day, the objective, again, will not also be realized. So those are just a few parting words. I know I'm over time, but I hope I added a bit of flavor of how open finance and open banking can actually work for the end user in the Philippines. It's the start of our journey. I think it's good that we're all here, we're talking about it. Let's use all of our knowledge, all of our background, all of the infrastructure, technology we have, but it's more important that we all collaborate with the end customer in mind. Thank you.